Hi everyone and welcome to today's morning report. Charles Appraisals on Tuesday the 28th of June with me, Rich Pro Market Analyst at Handset Markets. We've got a bit of a risk recovery going on. Sterling's rebounded around about 1%, about sort of 100, 120 ticks higher on the day. And that's sort of helping to just sort of generate a bit of support for these markets generally. Euro's higher just across the board on the Forex majors. We're seeing sort of improved risk sentiment and slightly corrective move on the dollar. The yen is the big underperformer. I say big underperformer, I mean the yen is underperforming the dollar, so dollar yen is higher, so that is generally seen as a bit of a signal for an improvement in risk sentiment. And certainly we're seeing euro stronger, the commodity currency is also sharply higher against the dollar as well today. So generally speaking, an improved risk appetite. We're seeing sort of the oil price bouncing from yesterday's lows. It's the volatility continuing really. The volatility surrounding this Brexit move that we've had in the last couple of days. Just now we're seeing the rebound as the volatility sort of unwinds on the upside. Now whether that move is going to be sustainable or not remains to be seen, and generally what you'll see is sharp moves down followed by a sharp move higher, and then the likelihood is that there'll be another retracement move in due course. So just bear that in mind if you're thinking about sort of going long only on into this risk rally, that you will see the sort of volatility just continuing in the coming days, I'd imagine. So just keep that in the back of your minds. So what we're seeing is this improvement in risk, and equities, for example, strongly higher, 2% rebound on the FTSE. FTSE is my chart of the day that I'll talk about in a bit, but certainly we are seeing that rebound and amid the risk improvement. In terms of our economic announcements today, we've got GDP for the US at 130. And let me just show you the list. GDP improvement to 1%. Now 1.4 was the last quarter's, as in Q4 final reading. Now the second reading of GDP for this quarter or for Q1 was at 0.8%, so that'd be a slight improvement on that. And then you've got the Case-Shiller home prices. That's expected to, depending on where you get your estimates from, to improve very slightly to 5.5, maybe just staying around flat at 5.4, but still fairly solid. And you've got consumer confidence as well, improvement to 93.3 is the expectation there. So a few dollar or US driven data points to look at today. But as I said, my chart today is the FTSE 100, and as I said, we've seen FTSE rebounding strongly. Now we saw prior to this rebound, we've seen two huge days of volatility. Yesterday, sharp sell-off and a sharp rebound today. Are we going to trust this rebound? I think it's difficult to really say at this stage, but as I said, you tend to see the markets just whip-sawing around in the wake of these big decisions, and generally what we have got is a corrective technical outlook really. You've got the stochastics falling, you've got the MACD lines turning lower below neutral, RSI failing at 60. It's interesting because the outlook now, I think, needs to hold above 6036, which is the old floor. If it can hold above that, I think that retains a neutral outlook. But I think just moving back below that, say for example, if the outlook on this rebound sort of got sold into, perhaps a close back below 6036 would be rather a sort of a disappointing move on FTSE. So at the moment it's okay, but just bear in mind that we have got volatile moves on these markets. Hourly chart shows the huge volatility that we've seen in the last few days. The reaction low at 5788 and then a rebound high of 6229, so sort of 450 odd ticks rebound on FTSE before again falling back away. We've seen another rebound, but again, will it continue? I mean, in these sort of markets, technicals don't really tend to be the driver. It's more like sentiment driven, and it'll be really just interested to see if the rebound can last this one, because I'd be very sceptical as to whether it will do. I think this is just going to be another rebound that gets sold into in due course. I don't necessarily think that this is sort of the beginning of the recovery. I think it's more like the volatility playing out, but obviously within that you have the volatile moves that continue. So you've got the day high 6119 being the initial resistance, but that's close to being tested again, only 5 ticks away from that. But above that, you've obviously got the rebound high of 6229. That, I think, is the key resistance now, really, to look at, because that is the rebound high that we saw on Friday before falling away again. So that is the key resistance to watch, I think, 6229. But ultimately, chances are I think we're going to probably drift back and see another test of the 5959 low. And if you see a 6036 close below that, I think that would be a negative move, and it would be putting pressure back on the downside once more. So with all that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.